Hello guys, welcome back to another Lumley trading video. In this one we're going to be going over the biggest trade of the month, and this is going to be over on US CPI. So again, just in case you want to access this, just in case you missed the videos or the videos don't give you enough time to prepare, because they're usually only released about 30 minutes before the trade. Again, you can find it in two locations. We do post it on LinkedIn if you want to follow us on there, or we do send it out by email. Again, it will be the exact same thing on LinkedIn, but it just goes to your email, and this will always go through the trade plan that we're looking at. And we'll send this out usually on big trades that we're looking to trade. So, CPI. How are we looking to trade this? So, again, not really too focused on the number. And the reason for that is we're not looking for, a 15-minute trade on this. Really, the way I trade this is kind of a minute in out. And the reason for that is what is really predictable. If we can trade the predictable, we can keep the probability that, we have a successful trade high. So again, then we don't have many losers. And especially on these kind of things where they're so volatile, I want to really keep losers to a minimum. So, number does not matter, just playing direction on the yen. So that's quite easy, self-explanatory, looking to trade the yen. But we can, and usually I'll go in with maybe one or two contracts on the yen. But where we can get some more size on is on these US stock indices. If the indices fake out, which sometimes they do, then we can trade it. And how do you know if it's a fake out? We'll go over that in a sec. But if they do fake out, I like to hit into those as well, because then we can get really good entry and really just great risk to reward. Because if we see it go against us, for another 5-10 seconds, we know, okay, that trade is not working, we'll cut out, not going to be a massive loss. But if it goes a direction, we're going to have a really good entry and we can make a lot of money on these kind of trades. So that's how I'm looking to trade that, and that's why the fake outs can be quite easy. The reason we don't take the whole trade on kind of a directional play on the indices from the get-go is sometimes they fake out. So a lot of the times you could get stopped out trading a directional only on the indices. And then, looking to get out the bulk of the position really within the minute. More like than not, I'll probably be out completely within a minute. But sometimes, I may hold one contract, but quite rare. And then, just so you know, if you are trading directional, especially on the yen, again, you're going to have two stop orders out. You're going to have a stop to buy if it goes up over a certain price, and you're going to have a stop to sell if it goes below a certain price. This is really great for two reasons, because again, this is going to get you in the trade as soon as it moves, whatever way. Because again, the yen doesn't really tend to fake out, so we can get the directional quite easy on that. Hit into the trade, and then not only will it give us an order to get into the trade, but it will also basically essentially give us an automatic stop, because no matter what, if it does fake out and it goes the other way, we're still going to have that buy order in case it went the other way. So that's why I quite like trading this strategy, because again, yes, you will still have a lot of money on the line, because it's not going to execute where you have your stop, especially on the first one. So when you're buying into it, you're opening your position, that's not going to feel where your order is. It just isn't, because it's going to move a lot harder than where your order is. But what it does mean is that if that executes and then it fakes out and goes the other way, okay, you do have a stop in place. Yes, you'll still take a loss, but you're not going to be losing massive amounts. It's going to be manageable. And then just again, we won't go over it, but just in case you don't trade them, natural gas, usually a trade we do trade every week. Quite an easy trade just to fade, but again, that's not what the videos are on. It's on US CPI. So that's how I'm looking to trade it. How am I kind of taking the orders? So one thing we can actually do, and I can kind of show you what we mean, is if we quickly kick this onto on demand mode. So again, this just takes us back to certain times. We can go into the past. So December 13th, again, this is always released at 8:30. So we can just start to see how does this react. Because again, this is what I mean by the fake out. I want to make this clear on what I'm looking at on the fake out on the indices, because again, this can get us a really good entry sometimes. Okay, the date changed, the time changed again. But yeah, so 8:45. And again, this, if you have Think or Swim, this is why it's such a great tool, because you can go back and back test strategies a lot easier. So this was the previous CPI. This didn't provide a fake out. You can see the indices just flew straight away. However, you did kind of get some insight. Again, it might have been leaked or something. You can see the minute before, really strong buying pressure came in. And this was something I've observed. This has happened 3 times in the past. Big movement the minute before. 2 of the movements have closed at their high, and that's when the trend continued. If it pushes up and then closes, somewhere like this, direction is unclear. So that can kind of give you an insight. If you see big buying pressure come in, it might be alright to buy one contract in, and you can usually get in for the bulk of the move. But again, you're taking on risk because you're not buying on any real reason, just on a pattern. So again, that one didn't get a fake out. What we can do is go back to November 10th, which was the one before, and I think this one did have the fake out on the indices. As soon as it lets me go back. And yeah, so this is exactly what I mean, and this is where we can make a lot of money if it happens. Again, it doesn't happen every time, but if it does happen, you can get some really good entries. So you can see the yen, we will have our orders out, or at least, sorry, I will have my orders out on the directional. So I'll probably have an order here and an order here. Whatever way that moves, cool, the order will trigger, it'll probably get filled somewhere like here. And then cool, within the minute I'll be closing, hopefully somewhere up here. That's what I look to do. But I do save a bit of capital, so if the indices fake out, so again, this is where it opened. If it fakes out down, obviously the yen went up, this will happen instantly. You can see where the yen's going. That's the first thing to watch, because obviously my order is going to trigger anyway. But then I'm focusing down onto the indices. Again, I tend to use the Dow more commonly now. But all I'm looking at is if I see the Dow go down when the yen's going up. Right now, inflation is key. Currencies and indices are moving in the same direction. So if I see the Dow move down, I know, okay, this is a fake out. I want to hit that in, so I'll hit some buy orders out really as soon as I see it go red. And the reason for that is this will probably happen in less than a second or two. This fake out will be quick. So I see that fake out. I'm going to try and hit in wherever, even if, let's say, cool, we hit the buy here and we don't end up getting filled until, you know, basically where the candle opened. Our entry is still going to be really good because, again, normally our entry would say beat up here. So again, we're still a lot more money on the table if we can catch that fake out. And that's what I mean by looking for that fake out. That's how I'll be looking to trade. And again, a lot of the times it does trend in the direction. But again, that's a lot less probable. And that's why I tend to focus on this as a 1 minute trade. But that is my trade plan going over CPI. I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this video here.